Yeah, so at Munro Partners, we run a global growth equity product that invests in growth stocks, and our edge is essentially turning over lots of stones and finding lots of new corporates that are going to be the next growth company. We do that by having operations in the UK and in Australia, and we spend most of our time, turning over stones. Interestingly, I've been living in the UK for the last 2 years, as many of you know, and yeah, generally people look at Australia very positively. Obviously, people worry about the housing market here, but politically, I know it doesn't feel that way here in Australia, but it is remarkably stable. We have an office in Edinburgh, which is actually the second largest financial centre in Europe, and we do a lot of our corporate access out of there. Scotland is a country that's trying to secede from a country that's trying to leave the European Union. I mean, this is not a great investment environment. We have political movements all across Europe that are struggling with immigration and free movement of labour in the area. These are all things that Australia dealt with many years ago and has under control. Countries in Europe would like to potentially leave the European Union, but they can't because their currency is attached to the euro, whereas Australia has a free-floating exchange rate, its own central bank, etc., and a solid rule of law, quite frankly, which is very important. So ultimately, I know it doesn't feel that way here, but from the outside looking in, it looks a lot better here than it does over there, quite frankly. So clearly, we actually think the Aussie dollar will probably struggle to fall significantly further from here. Ultimately, that's not because things are great here, but ultimately the protectionist movement that we've seen in Britain, so by Brexit, has caused the currency to be weak, essentially, versus the Aussie dollar in particular. Europe, obviously growth is probably going to be slower now, which is going to cause the currency to be weak versus the Aussie dollar. In Japan, they're obviously looking at further quantitative easing exercises, further stimulus, which is all designed to weaken the currency, which will probably happen versus the Aussie dollar. And then finally, in the US dollar, obviously the Trump movement is very protectionist as well, very similar themes that went through Brexit. And ultimately, were that to happen, that would cause the US dollar to be weak because they would essentially back out of trade agreements globally. And here in Australia, where rates are low, but perversely high versus the rest of the world, where some places they're zero or negative, we would argue the RBA is reluctant to lower rates too much further because of where the housing market is. And so ultimately, it will be seen as a yield alternative and dollars will flow to Australia. And so that's going to make it hard for them to push the currency down, even though it probably should go down. And so ultimately, we think most of the fall that has happened from 110 to here has probably happened now.